Eric Muadhi at muadhi.com. Let's take a look at UNG because I had a question that was sent to me where somebody was drawing a line like this, and based on uniformity they actually drew another line. So let's just put it here. So they are asking the question whether right now natural gas is a buy, and the theory, I understand why the theory makes sense, because if it is to bounce on the green line, for example, if it's to bounce like that, one of the reasons why it could be a buy is because it is right now showing that the potential for lower prices while we have an improvement on the RSI could take place if this holds. So that would be positive divergence. And my response is, I don't believe this is the best way to look at this, and I'll tell you why. The main reason is, number one, you have to see the bounce before you start acting on it. So you can't assume it's going to happen until you see it happening. That's one reason. But the other reason is when coming to draw our uniformity line, because we can see that once the stock moved above this level, there was a slight move higher here. Okay, so we can draw a line in theory here. In case it holds, then that would be where the next potential move would be. Now the problem here is, and it's a big distinction, is unfortunately this is happening while the stock has already made a fresh low. This tends to happen with a better precision of timing if the stock does not break to fresh lows. Once you break to fresh lows, then the uniformity principle does not work. And I don't want to confuse you there, but that's just how it works. And I'll show you an example on this very chart. Also keep in mind that in a previous video we discussed the idea that once you see a stock trade with its RSI below 30.9 and stay there for a couple of days, couple of weeks, whatever time frame you're looking at, once you see this ditch or a trough or a valley below 30.9 while the stock is making fresh lows, this is indication, generally speaking, that you are going to have to either test the lows or you're going to break through the lows. This staying below this level here is indication that there's a lot of bearish sentiment still in the stock. Even despite and in spite of any move higher, the stock could still stall. So if you had seen this here, you can see that there's obviously going to be a retest of the lows or a break to fresh lows. Now I want to show you the example here. So let's go back here and see this break. So the break here in May brought the stock off those levels, and we can draw our uniformity line for future reference. And you can see that this, once it came here and touched the same level, the red line, which was here, which happens to be lower, so it's lower than the previous high, then this, we can use this information as a sell signal. And again here, because it's lower than this period here, we can use it. In other words, if the stock was trading higher when this period was taking place, higher than the previous breakpoint, then it won't work. And again, so I hope that makes sense. It's a little bit confusing. The concept here works when the stock is coming back to test the RSI level when the price is lower and not when the price is above it. So to come back to the previous point, because here, yes, based on this movement right there, one can argue that the stock is actually coming back and forming some type of uniformity line. The problem in this example is the price already made a fresh low, so any buy signal here is not going to be very reliable. So that's the issue here. Because it's lower, any support here is not going to be very reliable based on the fact that it's making a fresh low in price, and that's why it's not very reliable. Keep in mind, if you take a look at the weekly, you can see here it closed at the end of the previous week at 31.04. So the risk is, if it cracks below 30.9 on any week that it cracks below 30.9, then it's going to have to make fresh lows. Keep in mind, if we go back to our previous analysis, because the stock spent a couple of weeks, in fact a couple of months below 30.9, then we should have known that any rally would still go up, but eventually come back either to test the lows or to break through the lows. Keep in mind, that we are looking at the monthly RSI trading below 30.9, which is basically where stocks tend to tank, and tank in a big way. So in my opinion, the stock is not giving a buy signal. That's pretty much the gist of this video. Eric Mwathe with Mwathe.com. As always, good luck, peace, and blessing. EACS.